Okay, welcome. Also in this market we can see that Smart Money Cartel is just doing empty inner range stop run. So the story is pretty similar as I showed before. So we have dumb money long traders trying to buy euro dollar. It's now 6:29 local time. And this is a 50-minute chart. Euro dollar trading at 1.1687. And what will happen is the price will go down from here and will take out this low here where the stop accumulation is at the 1.16763 level. And something I haven't discussed so much is the fact that it is very relevant whether the market is inner range or outer range. As a general rule, when you talk about the 50-minute chart, if you take, let's say, the last 4-5 sessions, this is your range. And when we talk about the 4-hour chart, we are more or less talking about, let's say, 3 months. Okay? So when I say this is in a range, you can see that in a particular scenario, yesterday's low in euro dollar was here at 1.1625 or what it was. So this stop accumulation is in the range, okay? This is a low from yesterday, this is a high from today. The counter, the pre-run counter move before the actual stop run. So this stop accumulation, this package, the medium-term accumulation is in a range on the 50-minute chart. So therefore it has a preference. It's not that difficult for the Smart Money Cartel to just take it out. And while I'm talking here, I see the pound yen going for the main accumulation as well. But I don't think I can just switch the screen. Or maybe I try. Or I'll just make another video right after. Let's see. So yeah, everything is live, everything is ticking, and here you see the stop run being conducted. Some reason people were really keen on seeing that in front of their eyes with the ticking prices. You never know how long these runs take. Some take minutes, some take hours, some take days, or even longer. No. Depends what the overall constellation is in the market. How does the market micro and macro structure look like? Where are the money position accumulations? Where are the short-term, medium, long-term stops? How does the longer-term time frame look like? I didn't talk so much about that, I think, so far. And there are other things, yeah. For example, this line you see here is actually a median. It is a median of the overall dumb money positions. Well, but these are advanced topics. I don't cover them yet, or maybe I never cover them. And I think many people have now get a glimpse of some of the principles at least. Such as the fact that, stop accumulations are only a certain percentage of the whole mechanics. You also have to understand the positions. I'm not talking about any sentiment. We talk about actual positions, the ones which are in the market right now, and the historic ones, for example. You can see all this you see here is live and ticking. Yeah, when stops are touched, they eventually are taken out. I've explained in the other video just now that this indicator, for example, is irrelevant, as is this cloud indicator, okay? I only have those two on there for visual orientation. They're irrelevant to any trades, any analysis, any other things. And if you're trying to establish a system based on such indicators, by combining, you take some like these, and most people have worse indicators than these, I have to say, but you add the MACD and the histogram and the strength, whatever it is, you combine them and they look good on your chart, and you think that visually those signals actually are profitable. Can be completely misleading, okay? Until you have actually tested such a strategy with real tick data, yeah? If you have found a way to test it under realistic conditions, incorporating the variable spread, incorporating slippage, incorporating the intra-bar moves, okay? The tick data, then without that, everything is misleading. As I always say, garbage in, garbage out. If you do not approach this professionally, you have no chance. You're competing with some of the most advanced companies and people around the world, you know, who did their homework. So you do not have an edge when you just start. And do not think that any price moves are random and you can just catch them. It's a complete illusion. And it fascinates a lot of people. You know, people are fascinated by the fact that they can make money from home, from the internet, from just clicking a mouse button. But that's not how the world works. You know, the fact that there are no barriers to entry trading. I mean, look, if you want to treat patients, you have to spend 7 years of your life studying medicine. You have to spend another 3 years of your life working in a hospital. You have to climb up the ladder. And obviously, without these qualifications and licenses, you're not allowed to treat anybody for that matter. And regarding trading, everybody can, whether it's a doctor, lawyer, accountant, no studies at all, manager, whatever it is, everybody has a right to open an account at a broker, place some money and click some buttons. Okay, but this is not how it works. This is why you belong to the 95% who loses, because you fall victim to the broker manipulation as well as the smart money algo manipulation I'm showing you here, I'm demonstrating to you. And this is really the big problem, you know. At the end of the day, these are the reasons why everybody loses and why they make so much money. It is like I've shown before, and hopefully as you have seen, it is completely equivalent to a poker player where these guys, they see your cards and they have decision power over what's the next card on the table, you see. It's unfair. It's an unfair game. And remember, no one of us will ever be like the smart money, okay? Every one of us is always some steps behind. Some more, some less. I mean, they have the ability to move the price instantly where they want. Yeah, they are the quickest of them all because, you know, this is not even like in stocks where people try to get close to the exchange. They are the exchange. They use dark pools to coordinate everything. Everything is automated. There's no manual interaction. The algorithm already knows what to do when in response to what kind of market structure, you see. There is no randomness. Okay, it's complete causality. That's why I call this market causality. Okay, causality is not randomness. Causality means you have an event and it has effects. And these are not random. And as you can imagine, there are of course different ways to play this. I mean, you know, some aggressive traders may, for example, trade the actual counter move up, you see, and then, only go for the main run after. Some people may skip it and leave a limit to short at the counter stop accumulation, you see. There are many ways of playing this. Some people may only try to concentrate on the money positions and their relevance on the scale and all these things, you see. I mean, there are many ways how you can play these things, but can you imagine how lost you are without having knowledge about all this? You're completely lost. All you see is a chaotic price movement and you have no clue what causes that. You see? And yet so many people believe that they have any kind of edge by, you know, placing trades in the market. It doesn't work that way, believe me. Okay, not in our time. It's 2018. It was the same 5-6 years ago in 2013. It was the same, I'm sure, 10 years ago in 2008. Now, 15 years ago, I'm confident that it was different. Yeah, the market was not so manipulated and not so driven by these algorithms as it is today. Okay. And who knows, how will it be 30 years from now in the future? Nobody knows. will this game actually change? I mean, one thing I'm confident about is that by now cryptocurrencies such as Bitcoin, they're driven by exactly the same forces as this. Okay, it's in their hands. Okay, I'm confident they do the same manipulation. Okay, same games. And the elites have made their money already during that 6,000% increase. Yeah? So now the dumb money comes and wants to buy and also make money, and that's why the price goes down, for example. Yeah? It is always the same. Okay. Price is moving towards the target. I hope it doesn't take too long. Already talking for 11 minutes. Sorry, I have another mic which is a bit better than this one. I will bring it next time. It has better quality. You can hear me more clearly. This mic has a bit of noise, I know. So we'll try to bring the better mic next time, okay? But for today, I just wanted to capture this here because many people like that stuff in particular. But remember, I have, I've documented such live trades, okay, over a 1.5 year period. You can see it on my other channel, yeah? You can see all this trade. And for a trade like this, look, I would have made, for example, 3 videos. Here, here, and here, you understand? So each of those live trades had different videos, and they were immediately uploaded to YouTube. So you can look at the uploading times, and you can see. I mean, it is what it is. Now the difference is here. I'm actually holding the cam on the thing, so you can see that live, so to speak. But the collection is the same. I just made, different videos. For example, every day or every few hours. But it's the same like this here. And also watch the educational videos. I have, explained quite well some of these principles. Maybe I may do more of these or maybe not. Depends. I'm motivated by people who leave positive comments, who leave likes, who like that stuff, who understand the value of what I'm showing. That's what motivates me. But of course you always meet all kinds of people. Ones who are motivating, ones who are demotivating. And I'm not doing this since yesterday. I've actually taken time, to create all this content. And I've invested time in making it understandable, putting it in a structured manner, etc. Okay, because then people have actually a chance to understand and to value that kind of work. And yeah, I personally believe it is one of the biggest cartels probably in human history. Okay, think about it. With the 5.3 trillion volume foreign exchange market, think about what it means if euro-dollar moves 10 pips, if it moves 20 pips, if it moves 30 pips. Think about the values behind that. You understand what I'm saying? This is actually amazing. And while I was talking, you can see that so what happens here is the dumb money shorties placed their own medium-term stop close to the price. So they pulled the upper stop in to the price. And the smart money likes that a lot because they now have 2 options. Base case, so what they normally do is they either go up, take out this one, and then once it's taken and overshoot a bit by taking out these short-term stops, then they go for the main run. That's a base case, you see. This is the reason why I will probably stop the video now, because it will take too long. And if I have time today, maybe I do some follow-up videos to show you the whole story, if I'm at the screens. It's now in the evening, and I don't know when that will be. But yeah, the base case, yes, in such a scenario is smart money, go take out the counter stop. After that, go for the main run, especially if more longies come in like here. You see, so when it goes up, dumb money long traders try to buy a pullback up back to the high, and they think by placing buy orders it would drive the market up, but it's the opposite. Because they're dumb money traders, they place buy orders, and the smart market detects it and puts the price against them. So this fuels the main run. You understand? Now, to do a normal breather up, like a normal pullback, just to take out this accumulation, doesn't cost smart money much. So that's a base case. So that's the reason why I will end the video now. And if I have time, I do one later as well, as I said. But I think you got some nice examples here. Anyways, the ones who follow me in other ways, they follow, for example, my live screenshots and all that stuff. Not everybody does it. Okay, guys. Have a good evening. Bye-bye.